Hi, everyone. My name is Anne-Marie Bant. Today is February the 20th, and this is the Moneyball Morning Report for the Benzinga Pro platform. Taking a look at SPY in the pre-market. I have pre-market action right here. You can see that we are below the close of a pretty important line in the chart. And so my thought is I've moved us from green to yellow because over the last 7, 8, maybe 10 days, we really are motionless. We've moved up, we've moved down, we've moved up, we're back moving down. So are we sitting in a range? Potentially. Are traders taking some measure of caution into NVIDIA's earnings on Wednesday? Potentially. On top of that, however, we had this big run into February's expiration, and then we had Friday, which was expiry, and it faded pretty sharply. That buy the dip that we've seen in so many spaces did not occur on Friday, and Fridays have been extraordinarily bullish for, many weeks. Many weeks, right? All right, so what do we want to look at? We have volatility bands that are compressing. They're always compressing in the pre-market. We don't get range expansion until the open of the day. Sometimes during the day, take a look at this, our volatility bands stay very tight. So we're not going to do anything if the vol bands stay tight like this. But if they begin to expand, we're going to have a position to put on. This lower extension of the band in the pre-market tells me that we might be a little bit sideways in the early part of the day. We'll see what goes on. But Menther Q, who does all the option statistics on the back end, has a lot of put positioning that we see there. All right, so put positioning can work in all kinds of weird ways. We can talk about that in the Zoom tomorrow. Today, I'm going to do a lot of position analysis and do some write-ups and some images for us to see where we are, what's next, what we're doing, and so on and so forth. I think the entire market is probably waiting on NVIDIA. All right, so you have the levels. You know what we're looking for. This is very key. As it sits, we're sitting in the sell the spikes, buy the dips, right? Sell the rips, buy the dips, just like Dennis likes to say all the time. All right, let's take a look at the Qs. Same sort of thing. Instead of neutral to bullish, though, these guys are just plain old neutral. They failed a breakout attempt. Here it is, the high. They did not break it from those days past. And then on top of that, they've pulled really fairly down into this deep space. So my thought, the same. It is a sell the bounces, buy the dips, until the market recaptures the trend, and then you can just buy the dips. Okay, so right now, any kind of long that you might position in here, you've got to take profit once it gets up to the top of these volatility bands. They really have been holding us very, very well in the price action, and so we want to keep following them routinely. What does this chart have to do? Well, it's got to get back above that VWAP, right? And it's choking on the VWAP right now. We can see it. All right, see the pink line is the VWAP. I probably should change the color of that, right? Or at least make it a dash. That's the VWAP right there. And so we can see that traders are really warring against these edges. So when it gets to 427, you can think about buying a 0 DTE. When it gets a 0 DTE call, when it gets to 430, you can think about buying a 0 DT put, right? That's what you want to do. That's the way that this looks right now. It looks very, very sideways, and I think the entire market is waiting for NVIDIA. All right, let's take a look at the ES. Same sort of thing, neutral to bullish, right? We've got to recover 50, 35, and retest it properly. Notice, here it is. We came in, we lost it, recovered it, but could not hang on to it. Absolutely could not. By the time the 230 time rolled around, it really started to fade. And so that is something that is a signal to me that says, you know what, these charts are going to be in digestion mode. Now, we came in and tested the round 5,000 number. Look at how long it took people to buy it up. This to me says, they're not all that excited about getting involved. They're just trading the ranges. All right. So have a peek. Look, it took 30-minute candle, 30-minute candle, 30-minute candle, 30-minute candle, almost 2 hours to pop off of this. And it's still sitting under the VWAP, right? And we have this little bit of negative drift. If we open up in the morning and the traders say, all right, here we go. You know, there are traders that use the initial balance range of 1 minute. And as soon as it breaks that range, they'll go long if it breaks above, or they'll go short if it breaks below. With this kind of sideways action, that's going to lead to a chop fest. My thought is wait for the chart to collapse below the low of it or above the high and then rotate back downward. And that's where the good trade is going to come from. Right now, that looks like a mosh pit. Right? Same levels to watch. We're just trapped between the same levels. That's why I didn't draw anymore, because I don't want them to get cluttered on the chart, because we really are looking at a sideways mess, right? We're below the close of the prior day. That usually means bears are in control, but they came in and dipped. Now, Anthony Crudelli talked about this 630 to 650-ish area, and I'm sort of rounding it away. He thinks that's a key zone, and they came right into it, and of course spent about 2 hours trying to get off of it, and here they are coming into the next round number at around 700. If you trade the Qs, you know that these round numbers tend to escalate all the way maybe up to the 30s or the 70s, even if they're fading. That's really sort of how they rotate. So it could move all the way up to the top of the second volatility band. That's probably where we'll see the sellers, right? Between 17,735 and 17,750. That's what I'm looking at. If it comes back down and double bottoms off of the 17,631, I suspect it's going to be a buy zone, right? Looks pretty good to me. Lastly, let's take a look at oil. I did not do gold this morning, trying to respect the time here. Oil's doing pretty good, right? Here's the thing. We know above 75 it's bullish. We know that below 80, every punch up into 80 gives us the pullback into this choppy zone. And so here's where we are. It doesn't matter what's going on, whether it's a skirmish in the Red Sea or whatever, this chart gives back every single spike in its current form. And so that's what we want to estimate. Now, it might have one day that looks monumentally fantastic like this one, but as soon as it gets into that second volatility band, it starts choking. So these are great trades to look at and say, if it comes down into that second volatility band, I'm going to start watching for maybe my momentum indicator to shift. And once it starts getting into something that looks pretty good, I'm going to try and take myself a trade. And so, oil likes to move in those 50s, 50 notions, and that's what we're looking at right now. So I'm sure we'll get ourselves to 78, maybe 78.20, looking like that, because that's fairly bullish looking today. And then, we'll see what happens. Right now, this chart is still landlocked in my mind. So the dips, the deep dips, lovely to buy. You just do not want to hang on above 78.50 right now. It's just a really hard trade. Now, if per happenstance it breaks through 78.50, then you're going to be able to take yourself along as its clean breakout above this formation. And that could very well likely be the case, or it's going to come down into this 76.30 where all the volume has been sitting. All right, that's it for me, folks. Take care, and I'll see you on the platforms.